Well, hello everybody. It's June 12th. This is the weekly review. Take a look at what happened last week and consider what's coming the next week. Last week was pretty flat, a little bit of a downtrend in the NASDAQ. The tech sector continues to be the toughest spot in this market, and typically, tech sector is what you want to lead. So, in that respect, it continues to be a little bit negative tone, down 2%, a little over 2% on the NASDAQ on the year, and plus 2%, a little over on the rest of the indexes. So the NASDAQ continues to be the laggard comparatively. As far as the technical summary here of what happened last week, it really was about that key level we talked about in the S&P 500, and we chatted about this quite a bit. I've been talking about this level, the 2103 number, and we got over that number right at the beginning of the week. We stayed over it all week long until Friday, and then Friday we gave it all up and we failed. Now, not only did we fail to stay over that breakdown bar's high, which is the key level, but we also failed on a test of this swing point high and a test of that swing point high. So we go over two swing point highs, right? Get over both of them. We close underneath them. We have a little less volume than we did on this prior one. And if we look back at this one, we had a little less volume than we did on that prior one. So you go over, you close under, you have less volume. That's a test failure, a complete one, on two swing point highs and on the key breakdown bar level. And so from that perspective, that's a big negative. Now, 1 week doesn't make a year, doesn't make a market. And so, we have to look at it this week and say, can we get back over it and stay over it? If we do, then we can go up and tack these highs and probably set new highs. If we don't, then once again, we're failing up here at the top. And that's going to be a real problem. And if you remember, we've talked about this before when this started laying out the way it did, is that you had this consolidation, eventually the breakdown. Could we be doing the same thing again? Consolidation and eventually a breakdown. It's possible. We don't know. What we do know is we're up here at the highs. This is the key level. We're failing to get over them again. You don't have much time when you fail to get over them. In other words, if you press up there and the market tests and the market tests, and if it can't get over that level, what's it going to do? It's going to seek the other side. That's just the way the market works. And it does that on all time frames. And on a weekly time frame, it will do the same thing. Where's the other side? It's the bottom of the range. Initially, it's the bottom of the high, but then it's the bottom of the range. And so this market has, another week or two to get over it. And if you think about it in terms of what's happening, you have the FOMC meeting this week, you have the Bank of Japan meeting this week, and you've got the Brexit vote next week. And so the next 2 weeks is the key weeks. The uncertainty will be removed in terms of all three of those items, and the market will react to whatever that uncertainty expectation was and what actually happens and the implications of that. So that's where we are. That's, kind of the setup going into these key couple weeks. And right now, the market still is on the bubble, could get over it. I would expect if it's going to get over it, it would do it probably right in front of that Brexit vote when that is known. At least the market has a good handle on the odds and makes its move depending on that. If we look at the other indexes, NASDAQ, the broad composite, it comes down to, this is on the Friday on the daily. If we go to the weekly on it, it fails here at that key level again, just as the S&P is doing, trying to get over and stay over this level. Got over it last week, couldn't stay over it, you're back underneath it. So just as we were talking about, the situation where you want the S&P 500, to give it another week to see if it can get back over that level or not, it was the same thing here. You got over it, you want to wait a week, for the confirmation. Can you continue to pull away? And we didn't. NDX, same sort of story, looks the same, right? And the index, of course, has been the weakest of the group. NDX comes back to the breakdown bar. If we put it here on the weekly, the breakdown bar got over it the first time up. This time up, can't get over it, failing at the breakdown bar's top. Finally, the Russell. Now, the Russell has been, a measure of risk on, and a lot of that risk on has been coming in, but a lot of this has been driven by oil. And I'm beginning to wonder if this is going to fail because I think oil is about to take a pretty big spill. The key on the retrace here, of course, is going to be the retest regen. That's where we find out the most. That's a kind of an early warning system. So as it comes back into this level, that's where we will find out. And you can see it has a little ways to go to even get there, but that's when we'll find out if it's going to try to regen higher or if it's more of a sideways move after this latest run up. The reason I say it's tied to oil is because it's tied to the small banks that are tied to the oil situation, and that's what's been driving this for the last 2 years. So if we come back over here, so the Russell, the risk on, the rest of June is going to be played out in the currency markets, in my opinion, based on these decisions that we just talked about, the Federal Reserve, the Brexit vote, the British vote. That's on the 23rd. There's referendums on not the referendums. The referendums on the 23rd. There's debates on the 21st and the 22nd. I think those debates, depending on how those debates go over, public polls are probably going to change. If they do, that's when the market's going to make its move. So I would think the 21st or the 22nd is where we're going to see this market decide what that vote outcome is going to be prior to the actual vote taking place. If the pound begins to work lower, which it actually is, that's a suggestion that the Brexit vote is going to succeed, and they're going to try to break away from the EU, their current arrangement. And I'm pulling up the ox markets. Here we go. And you can see it here when it takes place, right? You see it play out in the pound. That's where it's going to show up the first. So here's the FXB. You can see it coming down. Pound is going to go down if English vote is to exit. And you saw a pretty big spill on Friday. I don't know if there was some sort of a poll or what it was, but whatever it was, it started heading down again. It had had a decline, pushed back up, and if you bring this over to a larger picture, we'll go to the monthly, that push back up simply came back up to the retest regen off the swing point low. And so as it got up there, now it's trying to regenerate lower. If this does break to the downside, especially if it does it prior to the vote, it's telling you that vote more than likely is going to be for the exit. So the British pound is something to watch. The other thing that's been a big problem for Europe in general, partly tied to this, is the banking index. The banking index, and you can see the big spill on Friday, but the banking index had made a decent bounce, made a swing point high up here, got close to a retest regen on the weekly, but then started to give it up again next week or this last week. And if we see it continue, we could see these lows finally tested on a long-term basis, which if the banking index in Europe continues lower, European stocks are not going to move higher, in my opinion. And that's a problem not only for them, but to some degree for us, because we do have some linkage. The other thing that was interesting last week with precious metals, and as most of you know, I've been working a larger position in the precious metals. I think there's a long-term turn taking place in that group. If you go down here, I gave at the very beginning of the year, I gave, here it is here, the long-term themes. And one of them was that these commodities would be finding an intermediate, if not a long-term bottom this year. And gold is one of those. They're all the commodities in the same boat. Gold just happens to be the one that I view the most positive because of the monetary crisis that I believe the world is in, the debt structures that are out there. I think gold is the best alternative to those, and the long 2-3.5 year pullback in gold has set up an opportunity for a continuation. So if I come back to that gold, or if I come to the gold chart long term and pull the long term chart up, you can see that decline that took place. Now we actually have the turn in place, or at least attempting to be in place. And if we do get this next push up and break over these two swing point highs, I believe that long-term bottom may in fact be in place, and you can expect much higher prices on gold. And so if you're looking for areas to be in, commodities probably is a good bet, and that's been my view all year, and I keep emphasizing that. So the precious metal, the thing that was interesting about them is the dollar actually held higher last week, yet gold went up. That's typically not what you see. A weaker dollar tends to help gold, but dollar pushed higher last week, but gold continued higher as well. That to me, gold really moves on two things. It moves on fear of general markets, of currencies, instability, if you will. It also moves on an inverse relationship with the dollar. That inverse relationship with the dollar wasn't there last week, yet gold moved higher. That tells you the uncertainty is growing, and that's why gold is moving. But it's not just gold. You see the same thing with bonds. Bonds are a reflection of uncertainty as well. And that uncertainty is going to come to a head these next 2 weeks. But bonds keep moving higher in anticipation of that. Look at this stretch up here on the weekly, going towards that high on the weekly, and on the monthly doing the same thing. We're almost back to the all-time highs here on the bonds. That's, has to be a reflection of the uncertainty and the fear that's in this market. The European markets we've already talked about, they're feeling the pressure. I mean, if we pop over, and I know you probably have seen these charts before, but if we pop over to the world markets and I bring up, we'll just start with the CACs as an example. Big push down on Friday, all the way down to that, the big white price spread bar. The test took place, the volume was heavier. This looks to even go and try to break out these lows this week. And on the weekly basis, that would put it back into the highs of the lows. DAX not as bad, Swiss market not as bad either, but both of those also suggesting we're going to try to go lower. So European markets look like they're going to continue to feel the pressure. If that's true, which it looks to be the case, I suspect that's going to bleed over into our markets this week. If we look at the sectors, the financials continue to be the weakest group out there. We also had the consumer discretionary. These two weaker groups, these are two of the three largest weightings. Technology is the other one. With those large weightings being heavy, it's going to be hard for the S&P to move higher. Most of the other sectors still in good shape. That $50 level in oil on West Texas Intermediate looks to be a problem. I said that a couple of weeks ago. Last week I re-emphasized that it was going to be a problem. Oil got up to about 51 on the WTI, but then it started to give it back. Fell underneath this past week. You can see it's starting to take a little bit of a hit on the energy market. If you look at the USO, you can see the proxy. You can see the drop that took place after that push over the $50 level. I think that's going to continue. You got two swing point lows down here on the weekly, on the daily on the USO, and the retest regen. If we go back to the XLE, the retest regen is taking place here on the XLE as we speak, and so that will be an early warning system that this move that has been higher, the trend that has been higher, is probably going to take a break and start moving sideways at best. So oil market going to be a drag. The two large sectors, discretionary and financials, probably a continued drag this week. That tells me the S&P is going to have a hard time getting higher. The safety sectors also saying the same thing. XLP, XLV, those safety sectors are continuing to see the inflows. New highs registered on the XLP, new highs on the XLU, although it didn't hold it had more volume on Friday. This just suggests to me that we're going to see a continuation of movement into the safety sectors. And we had, on the XLU actually entered into this. We had a breakout on multiple swing points on multiple time frames last week. Usually 2 to 3 bars is the way that should carry. We did bar 1. I would expect we get a higher high this next week. And so that's the XLU and the XLP. They're telling us the same story, and that is that this market is going to struggle in the coming week, and that's even with the FOMC meeting this week. And I think that's because the European vote the week after is going to keep too much uncertainty on the table. Biotech's a real drag. Biotech's actually broke down. Let me find the IBB here for you. I had talked when I had my morning meeting with the two mentorees We had talked about the biotechs and the problems facing those, and there was a little range here that I pointed out that this, this big bar, this has been the key range. We got underneath it on Friday. Once you break that, you can expect it to expand it kind of an equidistant back down to the other side. At least to me, like this is going to try to put more pressure on the market this week. If it does that, going to put pressure on the XLV as well. And as you know, if you follow my portfolio, I popped out of the XLV. It is doing a full retest regen. Maybe it holds for a while, but that just looks to me like with the IBB breaking down, you're going to see pressure here. So XLV is the next highest weighting in the S&P 500. So, a week ago, it looked like this market was going to grind and grind and try to break those highs. It didn't happen. And on Friday, we saw failures, finally, again, at those key levels. The market's telling us that, as much as it wants to go higher, there's just enough uncertainty out there to keep it from going there. And if we can't get higher this week and certainly next week, this market's going to finally turn and come back down the other way. The other thing that was interesting last week, if you look at them, and you can look at these charts yourself, these high-tech sectors, not so much high-tech, but high-beta sectors, they all started to see the selling on Friday across the board. And so when the high-tech or the high-beta sectors start to see the selling, usually they're the ones that carry the farthest, the fastest. And because they're high-beta, and they're going to, the people don't wait to dump there. They dump there first. If you see that continuation start again Monday and Tuesday, that's an indication that this market really is seeing money come out of it again versus continually staying in. And you'll probably see that money push, what part of it that stays will push over and go into those XLP, XLU type plays. The bottom line here, in my opinion, is, the last 2 Fridays we've seen these sell-offs. It happened last Friday, happened again this past Friday. The European markets are under pressure, and that looks like it's going to continue with the uncertainty of the Brexit vote the following week. And so I think the European markets are going to put a drag on us as well. And this run higher that took place on the S&P 500, where it looked like, no matter what, they were going to take this thing up to the highs again and try to break it out. Well, that run higher was arrested. And as it pushed up to the highs, this nice, big, strong move up, here we go again, back down the other way. And so we get to the highs, we break over them, but we can't hold. We give it up. And so, it just kind of says this market, as strong as it is stronger than we think. And I believe there's another week or two here that it can kind of hang up in this area and try to break out still. But the market is having tough problems at these levels. And it's at these levels, and the problems are at these levels because there's so much baggage up here. There's a huge supply. Even if we're going to break out, it does make sense that it's going to struggle to break out, and that's what it's doing. So I don't want to take the whole breakout theory, potential off the table. I don't think it is. I think the next 2 weeks will tell us that. But at the same time, we do see that it is difficult at these levels to break it out, no matter how strong this market is. In this potential scenarios, last week the likely case played out, but it played out in reverse. The cases this week are exactly the same. They haven't changed. We've got that potential to see it push back to the highs and break out. I think this is a very low runner case, but it's possible. And maybe the Fed does something or says something that causes it. The worst case, maybe the Fed comes out and actually, let's say the Fed raises rates. That's going to be totally unexpected if they do that. And if they do, this market's going to tank. And you could see it push back to this area fairly quickly. The most likely case is Fed doesn't do anything. The Brexit vote's still out there. We push in and we test that May 10th high on the daily chart. So we come back in and we start doing a retest regen off of this. And then we'll see it probably hold as a result of that test and push back up into the Brexit vote. So my guess here is you're going to see consolidation again this coming week, just as we expected last week, off of this retest regen. And it's the first test back after 6 bars. I drew this a little bit high. It was just underneath here. It was back down in this area actually. So I expect you're going to see it bought into this area and try to bounce and bounce by the end of the week. That's where we stand. That's my thoughts. I think the situation is pretty much the same as it last week, and probably will be the same coming into next week with the British vote. Take care. Thanks. And I'll see you next time.